Testing, testing, 1, 2, 1, 2. There we go. Let me. To optimize it at some point. Okay, let's see what we're sitting on today. Okay. So low floats, I'm seeing SGBX, I'm seeing Ruby, and I'm seeing LVLU. Yesterday, that stock that we were watching for a little bit, CMCT, had a late day pop up into a huge crash back down. So let's look at that and see where that is now. So late day, it came down here, and I was kind of watching it down here, but I was like, nah, this is real estate. I'm not gonna do it. But it did end up coming up here from 7 all the way up to 1166. I mean, a huge pop into 2 halts and then a huge halt down. So it is what it is. I didn't take any trades yesterday on that. Let's look at SGBX, the leading small cap for right now. Let's see, does it have any news? Not seeing any news for it, but it has 6 million shares traded. This is 15 minutes, so it kind of looks a little wacky. Let's see what it is. SGBX. SGBX. Safe Green Holdings. Let me make sure y'all are seeing this. Yep. Okay. So it says Safe Green Holdings Corp provides prefabricated modular structures using wood or steel. Um, Hebrew says, "Good morning. No trades for me yesterday at all. Yeah, the market was definitely slow. But the good thing is today, I believe, well, yesterday night they announced the whole shutdown ending. So I'm wondering, is there going to be any kind of enthusiasm in the markets because of that? I don't know. We'll see. Let's see, Safe Green. This one, what is this? Wood and steel is base material for residential and commercial use in the United States. The company operates through 3 segments: construction, medical, development, blah, blah, blah. Okay, so it's out of Miami, Florida, was founded in 2007. Up 26% from where it closed. Well, we'll see how that goes. It's only 6 million shares traded, and I don't see any higher floats that are currently up here. So let's go ahead and jump over here to the front page and see what we got out here. Yahoo Finance Invest dives into AI, crypto, and markets and more. Let's see. Cash App debuts a new AI assistant that answers questions about your finances. Good morning, Danielle. Dutch delegation will travel to China next week for Nexperia talks. Minister says the Trump administration is actively evaluating portable mortgages.
Inflation stuck at 3%. We have insecurity about future income. The Challenger report shows.
Oh, that's actually live right now. Let's see. Sorry, America. Coffee prices probably aren't coming down. Okay. Cisco shares surge after AI-fueled outlook exceeds estimates. So Cisco, I'm going to take a note of that. CECSCO. It's up 7% right now. So we'll see if that can suck up some volume. AVGO, but Cisco is the thing that's actually mentioned here. That's probably why it's up higher. So I'm going to take note of that. Exclusive counter drone radar firm Chaos raises $510 million in defense tech. Okay, well, I guess I'll notate that. THC. All right, Starbucks workers to strike in 40 cities targeting Red Cup Day. So Starbucks going on strike. They may be going down instead of up. Investors getting a little wary because the workers don't want to be a barista anymore. Let's see, shutdown backlog could grip the U.S. economy. Toyota to invest up to $10 billion in U.S. over the next 5 years. One key way AI businesses differ from the old Silicon Valley. The longest shutdown in U.S. history is now over. The latest from YF Invest with Wall Street's biggest names. Okay, so let's go down here and see what.
Shutdown in U.S. history is finally over.
The federal government will now resume normal operations, and my administration and our partners in Congress will continue our work to lower the cost of living, restore public safety, grow our economy, and make America affordable again.
President Trump signed the legislation to officially mark the conclusion to a 43-day impasse that halted food aid to millions of households, cancelled thousands of flights, and forced federal workers to go unpaid for more than a month. It's also shaken markets and had long-reaching economic effects. In recent days, markets have been rising as hopes for an end to the shutdown grew. But according to analysis from the Congressional Budget Office, US GDP could be roughly $11 billion lower by the end of 2026. We've also been starved of official data, and we could still see some delays in some crucial stats, with both inflation and jobs data for last month likely to be impacted. After thousands of flights were delayed this week, headaches at the airports are likely to continue, and food aid for millions of low-income Americans won't immediately snap back. Most federal workers have not been paid in more than a month. A senior administration official said that government workers would start to receive back pay on Saturday.
Back pay coming on Saturday.
You mentioned challenges, and the aviation industry has been undergoing some challenges with the government shutdown. At a high level, what disruption has this caused for a business like yours?
It's been very disruptive. For the last week, when you go in with no notice and you just arbitrarily reduce the amount of flying in the system for all of us, incredibly disruptive for our customers. We had no advance warning to be able to get people to different places, so there were delays. When you couple that with the amount of the accelerated pace of staffing shortages in the towers, which I think was somewhat tied to what we were seeing with the forced reductions. Controllers are, and by the way, hats off to them, particularly those that have been working without pay for almost a month and a half. Really, really big thanks, and security agents that are doing that. But the reality is that there was stress, there was strain. It was completely unnecessary into the system. it's our industry that forces, I guess, even government to get back together and to open up, so be it. But it's causing a pretty significant disruptive event. The good news is that I anticipate we'll be fully up flying very, very soon, in the next day or so. And hopefully when the next time comes, we'll find a better solution.
Hopefully there is no next time with this.
But there always is.
Yeah.
But hopefully it's not our industry and our people and our customers that have to bear the brunt of the dysfunction, because the people that we put in power to run the country can't agree.
What this has exposed, this record-setting shutdown, Ed, is, like you mentioned, the shortage of critical people that allow planes to safely go in the air, the aging infrastructure. From your vantage point, how severe are these issues?
We're safe. We're absolutely safe. The safest form of transportation, period. And that's what we do all day long. We talk a lot about our brand, as I said, the airports and the fancy places we go. Internally, we talk safety all the time. And if you're not seen as safe, if you don't have that core trust element with your consumer, you can't do the things that we do. So incredibly safe. We've been accelerating over the last decade the retirement and the replacement of our fleet. Our fleet actually has gotten younger in the last 10 years. COVID partly helped, but we retired a lot of old planes during COVID, the 777s, the MD-80s, excuse me, the MD-90s, and several other older models. And we haven't had an issue, because we've been with Airbus for the last 5-7 years, getting all the deliveries that we expected. They've been operating right through this period.
What has to happen to get more air traffic controllers into these spots to backfill positions that maybe aren't being backfilled?
Well, one of the most important things is to modernize the skies. The air traffic control systems were developed decades ago, 50, 60, 70 years ago, still using some of the same technologies, the same infrastructure, very manual. And when you have an environment that's so stressful, that operates with such manual intensity, it's safe. But it's safe because things get slowed, and they maintain a big margin for error to keep us all safe, which we appreciate. But the reality on that is, today it takes longer to fly from Atlanta to New York than it did in the 1950s when we launched that route.
It's hard to even grasp.
It's hard to grasp, but that's because the system is so taxed, and so it's so slow. So you do circles, you wait in lines, and you don't have the modern technologies that we use in many other transportation industries. By the way, many other air traffic systems around the world have much better technology than we do in our states. Kudos to the administration. They got $12 billion investment to get started this year. Again, it was another thing that probably was delayed during this shutdown period, and we got to get it going again. But we all need to make that investment, and that's just a down payment. I think the real cost is going to be significantly better. I don't know of a better return that you can have, because just think about how much time it's going to save being able to use the technology, how much safer it'll be. The elapsed savings that you're going to see in terms of sustainability and fuel, and giving people their time back, and then allowing us to grow at a much higher pace than we've been able to grow.
From the outside looking in, people might think after a shutdown, everything gets back to normal. We're all good, dude. We're going to travel and get to where we get to. Is that the case? I mean, can you just literally flip the switch and things go back to normal?
There's no flipping the switch. We got crews that we got to get back ready for, because we've been taking flights out for a couple of days, in advance in time, and now we got to see if we can get those crews back on schedule. It'll take several days, but I'm hopeful that by the weekend things will be running very well.
Interesting.
Welcome to Yahoo Finance Invest. The global economy is rapidly evolving from shifting monetary policy to inflation pressures and structural changes thanks to technology. In the backdrop, record-setting markets that are sparking fears of a correction, or even worse. Joining me now is Mohamed El-Arian, Allianz Chief Economic Advisor. Mohamed, a real treat to have you here at Invest. Thank you for always making time for us. Let's start out of the block here on cockroaches. There's a lot of talk on Wall Street right now on cockroaches, and this essentially is risks coming out of various places, and it's hard to stop them. What say you? Where's the next, economic cockroach to be found?
So let me just say, we will have cockroaches, but not termites. And this is a fundamental differentiation. Cockroaches are unpleasant. They come in groups, but they don't eat away at the integrity of the system. Termites eat away at the integrity of the foundation. So why are we going to have cockroaches? We're coming from a period where people have stretched really far for additional returns. They have been encouraged to do so by a strong economy, by very loose financial conditions. And some people went beyond their comfort zone and beyond their ability to do due diligence. So I don't think we should be surprised that we will have these accidents, these credit accidents. We'll have some economic accidents, but I don't think we're going to have any systemic shock.
That is, of course, a good thing. And when you mention potential economic accidents, what keeps you up at night? Well, what are you most concerned about for 2026?
So what used to keep me up was a trade war. But the US has been able to impose higher tariffs without triggering much retaliation. So that doesn't keep me up as it used to. What does keep me up is what's happening at the lower ends of the income distribution for households, where there is significant pressure. And what keeps me up is the amount of debt that has to be refinanced at higher interest rates. So those two things are potential areas of pressure, which would be made worse if we get a policy mistake.
Mohammed, you bring up a really great point. It's something I've been thinking on very deeply of late. We've seen tremendous wealth created in the market this year, and the bull market has continued. But we're not seeing it, I guess this goes to your point, we're not seeing it translate into that average U.S. household, that lower income consumer. Is that cohort of the U.S., are they in a recession?
They're near recession, and they are spreading this concern about affordability, which is not just an economic issue, it's a social and political issue. The first shock to affordability was, of course, the 2021-2022 inflation shock. But that was offset, Brian, by income transfers. Now we have inflation stuck at 3%. We have insecurity about future income. The Challenger report showed you that layoffs were surging. AI will change the workplace. And in addition, we have high debt and credit cards that have been maxed out. So there is real concern on the bottom bit of what people call the K-shaped economy. And this is not isolated concern. If the lower household incomes stop spending, not because they don't want to spend, but they're not able to spend, that will contaminate upwards for the economy as a whole.
Another thing that small business owners are dealing with right now is tariffs and the rollout of tariffs. For the companies that you're invested in, how are these small businesses dealing with that? Are they raising prices? Are they changing up their sourcing? Are they cutting back in any way, especially at a time where we've seen this broad consumer pullback as well?
They're doing all of it. They're not really raising prices because they don't want to pass that on to the consumer, because the consumer may just not tolerate it, and the consumer does not understand. At the end of the day, the consumer has other options. They are trying to find sourcing in various different areas, but they are cutting back on their staff and people. And with the fact that AI is coming around, they can actually do so in a way that's not going to actually make them, hurt them as much as it would have maybe 2-3 years ago. But sourcing people and sourcing from factories and sourcing, finance and money is always going to be the three hardest challenges. And you should never, government's going to change, tariffs going to change, leaders going to come in and out, and various other things are going to happen. You can never put all your eggs in one basket. That's always been the rule when you deal with manufacturing.
And you were just talking about how cutting back on staff is one consequence of the current environment. And we've heard from a lot of folks out there that it's really difficult to find a job. We're in this low hire, low fire environment. Yet at the same time, we're seeing this uptick in layoffs. What would be your advice to someone that maybe is struggling or wants to take a side hustle and turn that into real tangible income?
Well, if you're struggling, understand that most jobs are going to go away. A lot of jobs are going to go away. The trade business is going to rise and going to be at an all-time rise. And invest in that education if you can. Also, you have to reduce costs and increase sales. How are you looking at your children? That's one of the issues. How are children today in high school and college? how are they taking $400,000 to $600,000 worth of student debt for a job that's not going to actually exist in another year or so? So sometimes you have to look at the entire thing as a family. What are you doing? Where are you putting the money? Are you looking at assets? Are you looking at long-term assets like bonds? Are you looking at crypto? Are you looking at, buying in Apple, buying in blue chip? Because, if you put your money in the bank, what are you going to get? Nothing. It's almost like cash is trash. So you have to look at all of these things. But if you're looking at a career, you need to start understanding how do you gain attention. Even if you're a plumber, you need to make sure that everybody knows about your plumbing services. And then you go out and look at these baby boomers who are their kids do not want the business, how to buy more doors, more plumbing doors, so you have a larger kind of version of a roll up. You can just buy 2 or 3 small businesses like that and roll it up and have a massive amount of business at the end of the day.
So there's really 2 AI markets from Palantir's perspective. People using AI, call it enhanced intelligence, to do basic things, but things that are not sophisticated enough so that they would change your revenue or margins. That is a very large market. One could argue as an informed citizen that market is very large, but may not create enough value to justify the actual cost of large language models or their implementation. What we see on the ground, not as an opinion, but as like a fact, is a subset of that larger AI market I would call AI that works either in a way that it can change the battlefield, or it can change your margins, or it can change your revenue. And by the way, can do it in a way that's so quickly that you can do it in the public sphere, so you can do it as a public company. You don't have to inherently take the company private, although you can do it in the private context, or you can do it so quickly you can change things on the battlefield. That portion of the market, so the subset of AI where you can show quantifiable results, again, life and death, safety results, or results so that margins or revenue actually change dramatically and quickly enough so that you can capture the value while you're still running the company in the structure as it exists now. So it used to be, to do these things, you had to essentially isolate an institution. I want to rebuild my military. I want to rebuild a company. I want to change the trajectory of my private company. The timeline on it and what you would have, the violence involved, meant that you had to take it offline for 5 years. Okay, that's a really, and sometimes you still have to do that. What the special thing about the category we're in is you can do all that so quickly that you can show quantifiable results. And that portion of the market is expanding as a subset. So if the whole AI market is here, this was a tiny subset. That is metabolizing the rest of the AI market. And so what we see on the ground is the people are very, very receptive. Under the condition, you can show it having worked in a similar environment somewhere, anywhere on the globe. So the part of the market that is weak, that where people talk about a bubble, is in the institutional context. So not consumer internet, where you cannot show the thing having worked. That part of the market is very weak and dissipating. Now, the part of the market we're in, which is we'll show you the results quickly and we'll get paid a subset of it, that part of the market's getting bigger and bigger and bigger, and that part of the market is going to dominate the rest of the market.
All right, so let's jump over here and look at the overall market here. Okay, so we had quite a bit of a pump back out of this huge correction. We got a little pause right back up here at where it was at these highs. It's 15 minutes. So right back up here at where it was, almost to 26,000, but now just a nice sideways action on the day. Even in the small caps, so on our low flow scanner, we're not seeing a whole lot. I mean, the biggest thing up that is a low float is up 31%. So, we're gonna have to kind of sit and wait and watch to see if anything new comes out. These up here right now don't have any catalyst that I'm seeing. So some of them had catalysts yesterday afternoon, but just not receiving a whole lot of love. SGBX with 7 million shares traded. LVLU only having 1 million. Ruby Super cheap one, 24 cents, with 51 million shares traded. So that kind of doesn't give us that range to give us a good payment there with it being that cheap. Some of the ones that I took note of off of Yahoo Finance is Cisco. They were coming up today. Starbucks has people going on strikes in 40 states or 40 cities. And then THC, that was another one that was mentioned. I'm trying to think what that was now. It is what it is. I'm just really watching these to see what volume is sucked up by them. All right, so let's refresh and see if we can see any new news here. All right, so Microsoft's plan to fix its chip problem is partly to let OpenAI do the heavy lifting. So Microsoft milestone raises 10 million to make sure AI rhymes with ROI. Okay, so those are the most recent ones. Government shutdown, boom, boom, boom. So at this point, it's just waiting and reading and waiting. Good morning, One Life. What do I think of MGRX? Let me go look at that. MGRX, let's see. What's the volume on this one? Why is it, why am I not seeing it? It's a little bit higher float. That's what it is. A little bit higher float than what I usually look for in pre-market. Let's look at the, you said it has all the buzzwords. Let's go see. So it's got, Mango, oh my goodness, Mangoceuticals partners with Eli Lilly and Novo Nordisk to deliver affordable access to Z-Bound and Wegovy for obesity management. Okay, let's go look at that. So MGRX. Oh, Mango. While that loads, let's take a look. So this is a 15-minute. Let's go to the 1 minute. On the 1 minute, we can kind of see a little sideways motion. Came from 176 up here to so about $1 move from where it was up to the top. Okay, so let's read this profile. So Mangoceuticals Inc. engages in the development, marketing, and sale of various men's wellness products and services through the telemedicine platform in the United States. The company offers erectile dysfunction products under the Mango brand, hair loss products under the Grow brand, hormone balance and therapy products under the Mojo brand, and weight loss products under the Slim brand. It also provides oral testosterone undecanoate to treat low testosterone in men and a form of testosterone replacement therapy under the Prime brand. And access for customers to licensed pharmacy for online fulfillment and distribution of certain medications that may be prescribed as part of telehealth consultations. The company markets and sells its products online through its website, www.mangorx.com. The company was incorporated in 2021 and is headquartered in Dallas, Texas. Okay, I'll slap that on the watch. I do see Circle. Circle is sucking up some volume as well. Let me see. So this one is MGRX. circle for some reason, sucking up, but it is not up, it is down. Okay, so we'll see if that continues down. Markets are sideways on a Thursday. We need to see. It's going to be kind of hard because if the markets are in indecision, you know, will breakouts last? Will breakouts go and go and go? That's what we're looking for. All right, back over here on MGRX. Yeah, I mean, it may become a leader on the day. It's up 31%. 17 million shares traded above all of the low floats right now. So definitely stealing some thunder from everybody else. How excited will people be about boosting that testosterone and boosting all of the male qualities, I guess. Yeah, that one definitely wouldn't have. I wouldn't have seen that one on my scans. Been like, but I probably would have seen it in the news if it got going. Disney operating income slides in the fourth quarter after weaker box office showing, but it notches gains in streaming. Okay. Been shut down latest the longest stoppage in US history is now. Wait, is this what I clicked on? Or what the videos? Okay, Trump signs bill ending government shutdown. Corporate confidence climbs as economic shutdown talk fades. We just saw Palantir, how people are really feeling about the economy.
Fundamental differentiation. Cockroaches are unpleasant. They come in groups, but they don't.
Just basically playing that live. I don't really.
Are you afraid of AI taking your job?
I think AI is coming and it's going to be used in ways that are good, but also possibly ways that are harmful.
I do see where it's being supplemented for things, writing emails, writing proposals and contracts. So I could see other people in my organization where it goes towards it's taking away their statement of work.
We kind of just have to work with technology and use it to better our own business.
I think that it's getting too smart, too quickly. Everybody uses it too much. And I personally don't. I try to minimize my use in general.
My biggest financial concern right now, probably staying afloat, like paying rent and other expenses and food, just trying to get by.
Everything is more expensive than it used to be. Rent prices in New York are going crazy. The job market is looking really tough right now. I know a lot of new grads who are having a really hard time getting jobs. I think that's a good sign of the economy going down.
Everyone is confused about the tariffs changing, not knowing what the price of their goods are going to be.
What are your concerns about crypto?
I think I'm going to sound old when I say why it scares me, but I feel like if it's not tangible, it's a little scary to think about, right? Like, you don't know where it's going or what it actually is. You can't hold it.
I tend to hold all of my crypto in self-custody because I feel more comfortable with that, and it gives me more opportunities to use decentralized finance, which is a great way to earn yield on your crypto.
I don't think that coins like Doge really have that much utility per se, but they're interesting to invest in, just to dabble in a little bit to see where it goes.
He's holding $1 million.
All right, time now for what to watch Thursday, November 13th. We're nearing a big day here at Yahoo Finance, our annual Invest event. It's all starting at 8 a.m. Eastern from our New York City studios. We've got a special full day of live global coverage of the key themes driving this market, AI, crypto, and a whole lot more with the top people in corporate America you'll want to hear from. Questions for our esteemed guests are now open and flown in on the Yahoo Finance community channel right at the top of our homepage, so keep them coming. Moving over to earnings, the season rolls on with...
Okay, so we got Walt Disney, JD.com, Applied Materials, and StubHub for Thursday
some
earnings
key reports on Thursday. We got Disney, Applied Materials, and StubHub. Disney announced results for the fourth quarter before the markets open. Analysts expecting a solid Q4 for the company, driven by strong performance in its parks business, despite competition from Comcast's new Epic Universe theme park. Taking a look over at the Federal Reserve, too, we're going to be getting another round of Fed commentary on Thursday from multiple Fed presidents, including Atlanta's Raphael Bostic. Bostic saying in a statement on Wednesday that he will be leaving his position when his term expires in February 2026. Well, corporate confidence is making a comeback, at least in the way executives are talking this earnings season. Mentions of an economic slowdown are at their lowest since 2007, even as companies we know face an uncertain economic landscape. For more, we're bringing in now Scott Krisloff, editor at The Transcript. Scott, it is great to see you. So let's start there, because that data point is interesting, Scott, that you know mentions of economic slowdown at their lowest level since 2007. What do you make of that, Scott? It does seem to track with some of the data points we get, Atlanta Fed GDP tracker, for instance.
Yeah, I mean, I definitely think that CEOs are confident here. And I think the main place that we're seeing that is in capital markets activity. So if you look at any of the investment banks, obviously they're talking about large M&A pipelines. They're talking about IPO pipelines. They're really doing the best business that they've done in a very long time. And so CEOs are confident, ready to invest and spend not only the tech companies on CapEx, but other companies as well.
So when you listened to those conference calls, Scott, and you read the transcripts, were there certain, I'm just curious, sectors where you tended to notice more of that confidence, more of that optimism than others?
Yeah, I mean, I think it's an AI market everywhere. And so I think the tech trade is driving everything. And I think that the tech trade is driving capital markets. So we, break out the financial section. The investment banks are really bullish around all of that. And then the energy section, the industrials, all of it just tied back to the CapEx that's happening in AI. I think outside of that, honestly, you have kind of a middling economy. The consumer is doing fine, spending growth is happening, but the consumer isn't strong, especially low-income consumers. But really, you just have AI driving the entire economy right now.
Beyond AI, Scott, I'm curious, tariffs and trade, how much were those dynamics sort of factoring in and coloring corporate commentary?
That's a great question. You really don't see that much commentary about tariffs and trade today. I think it's just within the industrial sector, there are companies that are exposed to supply chains overseas, but most of them have moved supply chains around so that they're not as exposed to tariffs as they may have been earlier this year. And so you just really don't see tariffs factoring in all that much.
What about the labor market, Scott? We know the Fed focused there, concerned about the cooling they see. Was that a dynamic, a trend to watch in the calls?
Honestly, the sentiment around the labor markets is probably weaker than the reality around the labor markets, at least from what we're seeing in the calls. I think most of the quotes that we pick up from calls around labor markets still suggest that labor markets are strong and tight. Certainly, consumer spending seems to be leveraging the low unemployment rate. And overall, people are reasonably confident about their jobs, even though there's weak sentiment, especially driven by maybe AI taking people's jobs.
What about the government shutdown in focus too, Scott? We got a vote coming up here in a few hours. Was that coming up on calls? Did CEOs and CFOs bring that up as a potential impact on consumer demand, for example, or operations?
Yeah, Josh, it's really incredible. It's just like a rose-tinted economy all over the place. And even though people do pay lip service to the government shutdown and potentially impacting the economy generally, you're really not seeing a major impact of it. And it's really just lip service. It's just that.
About deal making, Scott, you were there when Trump was moving back into the White House. It was thought, okay, here comes a rush of deal making, a rush of M&A. Was that a theme?
Yeah, absolutely. So you're seeing a lot of capital markets activity, but I mean, kind of to this point, you're seeing pipelines that people are still talking about, like robust pipelines in capital markets activity. But you have seen more IPO activity, obviously, and you have seen deals announced. But in general, the CEOs of the big banks are extremely bullish on their own capital markets businesses.
As you made your way through these earnings calls, Scott, I'm just curious, the takeaways for you in terms of what perhaps is suggested to you about where we are in the business cycle as we head into 2026.
Look, that's a great question. The business cycle is the question itself around. You've got a traditional business cycle that's happening with interest rates, but layered on top of it is what I spoke about earlier. It's just this AI trend and trade that is overwhelming pretty much everything else in the economy. Because capital markets are so leveraged to the AI trade, because the Mag 7 represents so much of the S&P 500 today, and there are so many capital markets players that are benefiting from the AI trade, basically. So the economic cycle, honestly, the traditional one, the industrial inventory cycle, the consumer cycle, those traditional pillars of the economic cycle just don't matter to capital markets as much as they traditionally would.
Scott, always great to see you and have you on the show. Thank you.
All right, so let's jump back over here. So MGRX, this is one that I would not have seen on my scanner. A little bit higher float, a little bit cheaper. I really like to see them get on up if they're really going to be pushing the limits. But it did have a bunch of catalysts on it, so it's only up 18% now. As far as the low floats, this is what I'm actually seeing on here. SGBX not doing much anymore. Ruby, LVLU, AMZE. For high floats, we have Circle that has finally started to suck up some volume, and then Nvidia. These two are the leaders in the in higher floats that move with range. I really don't care about the higher floats that aren't. If they aren't moving with range, but they are still a headliner on the news, then I'll just take note of them. But I'm really looking for the ones that actually move with some range, move dollars, at a time, $5 to $10 to $20 at a time, and really are snapping the eyes of retail traders. And if they're red right now and the market is going flat, I just want to see how these will react, how people will trade these high range, high volume movers. SGBX $3, only up 27%. Ruby, LVLU just pretty much flatlining down here. No motion at all. Okay. TAC, Cisco, Disney. I'm gonna look at the daily chart on MGRX. It's had a couple pops in recent history. It's like I saw it down here around 160 or so, and I was marking some levels, but it is opened up where 205, so somewhere in this gap right here is where it traded in between. So 288 was the high of today. 288 up here, and then it came all the way back down to $2, or actually bouncing right at $2 into this gap here. So yeah, I don't know if it's going to recover all the way back out of there, because it'll need to cross the 240s, back over 280s, and I don't know if maybe there'll be a longer term play, but for right now, I'm looking for day trades. Looking for those day trades, low float day traders. SGBX, what are you doing? Came down here 290. It's got 8 million shares. I would love to see some competition come up against it for sure. See, so yesterday it took a little grind up, 188 up here to 244s. The top of this is 350, but no catalyst to push it back up there. About to reach the top of the hour in 6 minutes. See if any newcomers come in. Usually if it's if it's something that's going to be a pre-market trade, usually it's moving early and you can get some pretty good trades going, during this time. But if it comes up too close to the open, I kind of just let it play. I'm like, all right, well, I don't have enough information, don't have enough structure, so I'm gonna let you play and see what kind of structure you build, and then we'll adapt to your structure. But I kind of like to see that structure. And if it just pops up and it's just going up with no structure, I'm like, I just first, once it pops up, I got to do my due diligence, go and see why it's moving and why it wasn't moving earlier, right? Because most things that are going to be hot, people are going to see them automatic, or not just people, but bots and everything else is going to be trying to buy their thing early. So why wasn't it moving during the time that SGBX or Ruby or some of these other ones were moving? MGRX not looking so swell now. Sitting right on that $2 level. Yeah, let me go look at the actual flow for MGR, because I don't even think I looked at that. I know the outstanding shares are a little bit higher than what I looked for, but I didn't look at the actual flow. Let me go see. So it says the float on this one is about 6.9 million. Insiders holding 29.88%. Institutions, kind of smaller institutions than the insiders. Yeah. Let's go look and see if they have any hidden gems out here of shelf registrations or anything like that. SG, no, wrong thing. MGRX. MGRX does have a shelf registration from 6/13/2025 shelf registration. So yeah, a couple months ago, 5 months, but still within the range of them. If they want to do it, they can. So definitely keep that in mind if they're trying to do a money grab.
What you mentioned on AI and productivity, you can see AI chatbots, at least for now, this current wave of innovation is already starting to drive a lot of productivity. How much of a risk is it to jobs around the world? How concerned are you?
I'm concerned mainly because of the corporate mindset, Brian. If you look at the promise of AI, there is a labor displacement risk, and there's a massive labor enhancing opportunity. And the worry I have that with the exception of a few companies, the mindset right now in corporate America is about cost minimization. AI is viewed as a cost minimizer. What AI really is an enabler, a productivity enabler that gets there from better work and more work. And I worry a little bit that the mindset is too focused right now on cost minimization, because the real promise of AI is not labor displacement, it's labor enhancement.
I told myself coming into this, Mohammed, I didn't want to be that guy that asked you about a bubble. I just think it doesn't capture the nuances it deserves. So let me, if I can frame it a little more academically, how concerned are you that AI stocks are grossly overvalued?
So let me share the work that I've been doing with Mike Spence, a friend and a Nobel Prize winner. We believe that we are in a rational bubble. So yes, there are elements of a bubble. And there's three elements in particular of this bubble. First, the frontier, those working on foundational models. Not all of them are going to succeed. And yet all of them are attracting significant investment. Second, diffusion isn't being talked about enough. Diffusion means getting AI into the workplace in an orderly fashion, in a comprehensive fashion. We don't have a diffusion policy so far. Other countries, China does, UAE does, we haven't. We've got to get diffusion right. Otherwise, the promise of AI is not going to be fully realized. And then you and I remember the dot-com era. We remember companies simply putting a label on what they do and attracting investment. Well, that label today is AI. So there are elements of a bubble, which means that people will end up with losses. But the aggregate value of what's being created is significant. And therefore, the rationality part comes in, Brian. It makes sense to take a venture capital approach to AI. The payoff is so large that it is rational to have multiple investments and to overinvest. So the good news is that it's a construct that will make us more innovative, more competitive. The bad news is there will be tears, there will be losses, because elements of it are elements of a bubble.
I wanted to leave Invest viewers thinking with one deep thought. And let me come at you with this question, Mohammed, before we get going here. If you were writing a short message to policymakers right now, one key action they should take, what would it be and why?
That realize that our future is going to be at the tails of distribution, not in the belly. You know, for a long time, we grew up with unifying themes, the Washington Consensus, globalization. We are now living in a world of fragmentation, in a world that structurally changes. And what happens at the tails are going to determine where we end up. So don't get fooled by a normal distribution, a bell-shaped distribution. Realize we're in a multimodal world.
Okay. I see Donnell said he was getting into MGRX. I'm still, let's see, what's the overall? So it went up here to 288, pulled down to 257. Has some type of ideas that could be down here. I don't know. 207s. Got that's kind of steep there, but right at the 210s right now, and room back to the $2 level if it wants to. High of this is 216. 32 million shares traded on it. Oh boy. Definitely some pretty big sizes on it, but this is a lower price stock, so you expect to see bigger sizes. Over here on my level too, I'm seeing, 30,000 shares being traded on and off. So all it really takes is one fat finger to mess it up, but we'll see what happens. It's a little bit higher outstanding shares, but it is a low float mover. It's got catalyst, men's health, men's testosterone, hair growth, and all of that. Point of control is up here at 231. Point of control on the 5 is 231. Yeah, right at the 231 for all time frames right now. It's the highest traded position, 230s. So it does have an uptrend inside of an uptrend right now. See how that ends up holding. Just drawing out structure. And this structure has to be tested. These are just ideas right now with no test points. So just kind of drawing out what it looks like, what could be the idea. Went up to 221. We'll see if it continues to hold this uptrend. To get back out of the gap, it would need to, actually it's already out of the gap, 220, 203s, like $2 flat was the beginning of the gap. It bounced off of that up here to the 20s. So as long as it holds above 2, it's going to be looking like it's going to, I don't know if I would say be strong, but it could be stable. Just got more high flows popping in, sucking up volume. So we have now on the high float Circle, Apple, Microsoft, Nvidia, BABA is up 4%. Google, and these are the top ones that I'm seeing for right now. And then low floats, still waiting for something impressive to come up. It is 707. It is what it is. No rush trading. tell you one thing, it's definitely got, if it doesn't have anything else, it's got liquidity. If this volume continues to rise, it's probably going to move this point of control down here into the 1/4 or the 214 level. Keep seeing these volume spikes, so we'll see how it trades in this level. Will it get picked back up? Will it go down and test this 210 level in this little gap here? Market is still steadily slipping to the bottom side of its consolidation range. So this is where it was sitting. It's 25,400 whatever, and it's kind of just continued to make these lower highs towards the bottom. But the more times that it tests down here, it seems the stronger that this support becomes. So right around 25,460, if that can continue to hold, maybe we'll see a nice strong hold during the day on the NASDAQ. Coming right down here to the levels. Let's see how it tests. It's got two levels here, one at 212, one at 205. And can it bounce around in these levels and then move higher, or what? Now at 19% up. SGBX making a little pop here as well. SGBX up 33% with 13 million shares traded. Does not have catalyst, just making a move up from $3 up here to $3.20. That one's not looking green. Okay. So got a little battle here. Who wants to win out? SGBX with no catalyst or MGRX with catalyst, but you know, a little bit cheaper. Both of them are pretty cheap though. I mean, one's $3, one's $2. So bounced off of that idea that we had right there of the 212s. So this was a trend inside, an uptrend inside of an uptrend. So it is showing a little strength. We'll see where it wants to go from here. Again, this is our point of control up here at the 231, where the majority of trades have gone for this session. Bottom of the value level is down here at 209. Top of the value level is up here at 249. We'll see if it continues to walk up this trend. little bit lower high there, 220s, then 220s. So right at that 220 level, showing a little bit of dissension. The bottom of this test was 211, so we had 216 is still riding on this trend. So still holding these levels. Has room down to this final boss though, down here to 206. So I think as long as it can hold above that, it'll be okay. But if it starts breaking down this lower uptrend, it's probably going to be showing some weakness. Now it pulled down the point of control into this level around 216 and just popped down. So this is where the majority of trades are going in here. Just pop back up there. Shoot. $221. Still above the trend here. It's gonna make it up here to the 231s. That's where the boys are sitting. So 217 is the bottom of this that has separated from this trend line. See how that holds. 10 seconds left. The close of the 15-minute. Double top there at the 223s. But this is on the 1 minute, so I don't know how much weight that actually holds. Could just break through that. We'll see. Hugging right up here and has brought the point of control down now. So after double top, close that candle as a double top. We'll see if we can see any more movement down. Has room down here to the 207s right now. SGBX coming on down. LV, LU. Circle. 6 million shares traded. Another test on this trend. So 1, 2, 3, and now 4 times. Continue to test this trend. Yeah, this thing's really choppy. What's the range of this? So this has been from 2 up to like 210. So about maybe 10-cent moves or a little bit less than 10-cent moves in here. 207 up to 221. 211 up to 2. So yeah, a little bit less than 10-cent moves in here. MSRN, what is this? Oh, that's looks like a buyout or something like that. Acquisition. Yeah, acquisition. Never mind. MRSN is trash. So will this uptrend previous idea become resistance? Will short start to attack here? Okay, getting a little spoof up again to this double top. Can it snap through this double top 223s? Continue to hold this level. This is 1, 2, 3, 4 test on this, and continue to just kind of climb the trend here. $35 million shares traded on this one. Keeps making these higher levels, but it needs to break and hold something. Top side of this downtrend is up here at what, 20 or 245 right now. So definitely a lot of work to continue this uptrend for an extended period of time. And this will be the third time that it's tried to do a break higher and met some resistance around this 225-ish level. $225 hard test there. Still holding this uptrend. Got room all the way down to the 208s now. So as it continues to trade higher, what I do when I'm in a trade is just trail this overall one until it starts ripping away upward from this uptrend inside the uptrend. Then I start using this one as a new stop point. But yeah. Yep. I mean, the higher outstanding shares is probably what's killing it. If it had lower outstanding shares, people are like, oh, let's go. And the shelf registration as well. So, it's got a double whammy. Has catalyst, but it's got some definitely got some red flags out there. Anyway, it is almost 7:30. I'm about to get ready to get up and out of here. Probably going to look for something to trade, but at this point, if anything pops up, we're too close to the open. I want to see some structure built. If something just randomly pops up, I'm be like, oh no, I'm gonna wait for me to get some structure, and then I'm gonna see what I can trade. But for right now, haven't really zoned in on any low floats that I'm like, oh yeah, this is it. Looking through, we got an acquisition up here. We got so low floats, got an acquisition here, MRSN, SGBX, 25%, LVLU, Ruby, Thar, and then we got some going into the red down there. So that's the low floats. for the higher floats, we have Circle leading in volume with 6 million shares traded. Apple right behind it with 3 million, and then below that is Nvidia, Microsoft, Baba, Google, and Tesla. Now these, when I say higher floats, these are higher floats, but these also move with range. They move dollars, right? They move a lot of dollars at a time is what we're looking for, especially for day trading. Which one of these is sucking up the volume on the day? And then the next on watch, these are the things that I took note of from the news earlier. So this was a call out, MGRX, from a viewer. Then we got Disney, Cisco, Starbucks, and THC. And I was trying to see what was sucking up the volume there. Let me do one more refresh on Yahoo Finance real quick, and I'll be marching on out the door. And I will probably take some trades later on, since pre-market seems to not have been too hot for the low floats. Okay, so big tech, soaring profits have an ugly underside. OpenAI's losses. Microsoft plan to fix. Okay, so we already read that. Trump signs bill, blah, blah, blah. Okay, so nothing really new has popped up here in the news. So that is what it is. Okay, so looks like we are now once again testing the uptrend, and it seems like each one of these tests, they're getting more and more bodies under this level. You see that? So this one was just some little spikes down, came back up. This one was a spike, a body, came back up, and now we got a more of a body under here, and then two bodies. So the bottom side of this is 218, has room down to the 209. So about a 10-cent drop that it could do. Now it's opening candles under here as well. So none of that is looking too good there for it on those previous ideas. So I'm thinking it's going to be showing us some red back down here to 210s here in a second. But yeah, that's pretty much it. We've done our due diligence, haven't taken any stupid trades, and looking to find where the range and the price that I'm looking for is. And I'm okay with a no trade day. I promise you, I'm cool with a no trade day. And I've only taken 4 trades this month, so I'm all right. I'm green, so. But yeah, if something pops up, let the structure build and get into attack mode. MGRX popped all the way back through. Still holding that level, man. So just absolutely grinding up here. And this is what I don't like. This is hard to day trade because of this grind. If something was low float, or if it had an actual good catalyst, we would see much stronger moves out of here. Yeah, this is just playing with people's souls right here. All right, I'm about to get on out of here. I'm not gonna sit around and watch this. Yeah, I can get on and get ready to make some money. Anyway, that's it for me today. If y'all have any questions or comments, definitely you can join the Discord. That's where we continue conversations during the day. If I see anything during the day that I'm looking to trade, I drop it into the Discord. And yeah, so that's where we kind of continue all the conversations. But I'm about to jump over here. Kind of boring pre-market, so nothing really caught my heart and eye. So I'm cool. And as always, I will see you guys in the next one. Peace. Let's see, what do we want to do here? Golden hour. Let's do that one.